Three. Hello, I'm Mario Toneguzzi, managing editor of Canada's podcast, taking care of business today with Don Kottick, who is CEO and president of Sotheby's International Realty Canada. Thanks, Don, for joining us again today.
Thanks, Mario. Thanks for having me again. Great to be here.
All right, let's talk about the latest company report on the top tier luxury real estate market in Canada. In a nutshell, what's the report telling us of what's happening in that market?
Well, it's interesting, Mario. I mean, one of the biggest probably indicators that is hitting the market is basically the immigration. I mean, if you look at all the major centers across the country, we've experienced population gains. This is pretty much right across from Halifax, through to Toronto, Montreal, Edmonton, Calgary, and Vancouver, Victoria. Everybody's experienced population gains. But one of the things that is really interesting is these population gains are actually masking some vulnerabilities in our housing market. And when you dive deeper into the information, we started to look at the regional migration as well as the interprovincial migration. And you start to see, if you look at Montreal, if you look at Toronto, you look at Vancouver, they've all experienced a regional migration that has taken some people out of the major centers and moved, to other parts of the province. But the only province that actually, showed basically positive regional migration was Calgary. Has been attracting some people. And then if you look at the interprovincial migration, Calgary is one of the destinations right now from people all across the country. So, that is really kind of influencing things. But when you look at kind of these different areas of the population gains, it basically is a sign of some of the local sentiment of consumers, the affordability aspects and just the overall confidence in the market. So that is what these kind of indicators are pointing towards.
How would you describe the luxury market? Strong,
Well,
healthy?
yeah, I think overall it's relatively balanced. I mean, you have, certain areas that the inventories are starting to grow pretty much across the country. I mean, we're seeing some other trends too, like in the luxury, the ultra luxury space. People are taking longer, their searches are taking longer. There isn't that rush to find those properties, so they have time is on their side, so they're taking longer to find the properties. Negotiations are somewhat longer as well too, where people are, the buyers feel that they're somewhat empowered because they don't have people lined up at the street to move into the home. So the negotiations are being stretched out, but during this time, like, supplies are continuing to build. And depending on the market, we're seeing a little bit of price movement, but all in all, I think it's somewhat of a balanced market at this point in time across the country.
Okay, now when we're looking at the market in general, I know we've had some easing of interest rates. How has that impacted things, or how is it going to impact things going forward?
Well, I think we had the rate cut, that the quarter point that came a month or so ago. A lot of people thought it was going to create more activity in the market, and I think the general consensus is it's not drawing the buyers from the sidelines like it did. And we've got some future rate cuts, and I think it will be we'll just have to wait and see if when these buyers decide to come back in to the market based on the cuts. But I think the most recent cut is probably going to bring more people into the market. And once again, we'll have to wait and see, right? I mean, buyers have become much more discerning.
Yeah. Now, when you look at the luxury market in general, I don't know if this would be maybe more anecdotal than anything, but how does Canada compare to what's happening, say, in the US or even other parts of the world?
Well, I mean, it's once again, you have to look at the individual markets and
Yeah.
in terms of what's going on. I mean, real estate is really local, right? And I think, there's a similar thing even in Canada. Sought after neighborhoods will always be sought after regardless of market conditions. So it really is location, location, location. Like good neighborhoods, even in the worst of times, people want to live there and people move. And it's the same in the US. And I think there is a lot of global uncertainty at this point in time. A lot of people, feel real estate is a safe asset. So, outside of, Canada, I think people, move their money from, obviously the volatile stock markets and money markets, and real estate is always a haven. And so we're seeing that a lot of the wealthy, ultra wealthy are looking at real estate as a destination. And, if we didn't have the foreign buyer ban, we'd probably be attracting a lot more people.
Yeah. Any thoughts on that? Like when, how long are we going to have this in place?
Well, it's interesting because, some of the sources from our lobbyists, had come to have discussions with the federal government that they knew that it really, wasn't creating the impact that they wanted to
Mhm.
create. So we were kind of surprised when it was extended. I don't think it's going to, continue on after the current government. But at this point in time, it is having some negative effects. We were just talking to our office out in Halifax, and they said that in the local market, it's actually having a very negative effect on the local economy because it's actually even impacting the tourist market. So people,
Mm.
are saying, well, I can't buy, why would I go there? And
Yeah.
so tourism is one of the drivers, especially in the Atlantic provinces. So people are starting to see negative economic impacts from the ban. I mean, there's still some areas where people can buy. It's obviously had a negative impact investment in new construction, which we critically need supply in this country. We need the right supply, not purpose-built rentals. We need homes that people can move into. So I think it's taken away some of that funding as well too. So all in all, it is not a positive piece of policy. I think it was more politically driven than functionally driven. And hopefully the government decides to retract it. But at this point in time, it doesn't sound like they have any desire to do that.
Yeah, and last question I want to ask you, Don, and it's kind of similar to the foreign thing, but it's more, there's a lot of rumblings out there about a residential tax,
Mhm.
on sale of properties in the future. What what are your thoughts on that? What impact would that have if something like that came about? What impact would it have on the market?
Oh, I think Canadians tend to be somewhat passive, but I think that's one tax that could cause a lot of consternation. I mean, it's first of all, it wouldn't be a fair tax.
Yeah.
People have accumulated a lot of their savings and their retirement in their primary residential buildings. So I surely hope that the government doesn't attempt to bring that forward. I know they keep having CMHC do studies, whether it's feasible. I think the reaction from Canadians would be very loud, and it would not be, in my opinion, a good thing for Canadians if they were to bring about something like this.
All right, super. Thanks, Don, for joining us today.
Thanks, Mario. Great to see you as always.